Welcome back to the Zero Fluff Books podcast. I'm Lauren, and today we're going to talk about something that confuses almost every small business owner I've ever met: sales, fees, and payouts. If you only look at the deposits hitting your bank account, you're missing half your money story. Let me show you what I mean. Imagine you're an Etsy seller. One morning you check your bank account and see a deposit for $147. You smile and think, great, I made $147 in sales this week. But did you? Here's the reality. Your shop actually brought in $180 in gross sales. Etsy skimmed fees before sending the payout. You also paid for shipping labels directly out of the platform. By the time the deposit hits your bank, the number was smaller. So what you thought was your sales was really your net payout, money after fees and deductions. And if you don't track the difference, you'll understate your revenue, ignore your expenses, and never really know your profit. That's the deposit illusion. And that's one of the biggest mistakes I see online sellers and small trades businesses make. And it's not just Etsy. Let's say you're a contractor getting paid through PayPal. You finish a job for $500, and a few days later, $485 shows up in your bank. Most people record that $485 as revenue, but that's not the whole story. You earned $500. The $15 difference was a processing fee, a legitimate business expense. If you don't record that correctly, your books will show smaller sales and fewer expenses than you actually had. The net result, your profit looks the same, but your numbers are misleading. And misleading numbers are dangerous. They make you think you're charging enough when you're not. They make you think your expenses are lower than they are. They rob you of clarity. So why does this matter so much? Because clarity is everything. When you confuse deposits with sales, you lose the ability to price your products and services accurately, see how much fees are eating into your margins, and track trends in gross sales versus net payouts. Think about it. If you only look at deposits, you might think your sales are shrinking, when in reality, your fees went up. Or you might think your fees don't matter, when in reality, they're taking a bigger bite out of your profits than you realize. That's why you can't stop at the deposit. You have to map the whole journey. And that's what today's episode is all about: creating your money map. Here's the idea: every dollar in your business takes a journey. It goes from the customer to the platform, through fees, into payouts, and finally into your bank account. If you only track the last stop, the deposit, you're blind to the rest of the path. But if you follow the map from start to finish, you see the full story. You see gross sales, fees, refunds, and net payouts. And the story gives you clarity. Now I know what some of you are thinking, but Lauren, deposits are easy. They're right there in my bank account. Why complicate things? Here's why. When you treat deposits as sales, you're not really keeping books. You're just glancing at your bank balance, and that's not enough to run a business with confidence. Let me give you a quick example. A shop sells $1,000 worth of products in a month. Shopify takes a 3% processing fee, $30. There's also $15 in transaction fees and $5 in chargebacks. The actual payout to the bank is $950. If you record $950 as your revenue, your books will show revenue of $950, fees of $0, and your profit is a question. That's wrong. The real story is revenue is $1,000, fees are $50, and your net payout is $950. Now you can see your true sales, your true cost, and your true margin. That's clarity. Let's zoom out. Deposits are misleading because they're incomplete. They're like looking at the last page of a novel and thinking you know the whole plot. You don't. You're missing the chapters where the fees show up, where the refunds are processed, where the shipping is deducted. And when you miss those chapters, you miss the point. That's why I call this episode the money map, because once you learn to trace the full path, you'll never look at your bank balance the same way again. So here's what we're going to do today. We'll start by breaking down gross sales versus net sales, what those terms mean and why the difference matters. Then we'll look at fees, Etsy, Shopify, PayPal, and more, and how to track them correctly so you don't miss expenses. After that, I'll explain clearing accounts in simple terms, what they are, how they work, and why they're the missing piece for most online sellers. And finally, we'll tie it all together into your money map, a framework for understanding sales, fees, and payouts from start to finish. By the end of this episode, you'll know exactly how to follow your money's journey and how to keep your books accurate, clean, and stress-free. So if you've ever wondered why your deposits don't seem to match your sales, or if you felt like fees are a mystery that just happened behind the scenes, this episode is for you. All right, let's start our money map at the very beginning, sales. Because before we can talk about fees, payouts, or clearing accounts, we need to clear up a basic but critical distinction, gross sales versus net sales. Gross sales is the total value of everything you sell before anything gets taken out. Think of it as the sticker price of your work. If you sell a handmade mug for $25 on Etsy, your gross sale is $25. If you invoice a client $500 for a job, your gross sale is $500. If you ring up $1,000 worth of products on Shopify over a weekend, your gross sales are $1,000. Gross is the starting line. It's the numbers your customers agree to pay. Net sales, on the other hand, is what's left after fees, refunds, and discounts are deducted. It's the money that actually makes it to you after the platform or processor takes its cut. That $25 Etsy mug, after transaction fees and payment processing, maybe you actually see $22.50. That $500 client invoice, if the client paid through PayPal, you might only receive $485 after fees. That $1,000 Shopify weekend, after processing fees and maybe a chargeback, your net could be $965. Net is the number that shows up in your bank account. Here's why this distinction is so important. Gross sales tell you how much business you're doing. Net sales tell you how much you're keeping. If you only track net sales, you miss the full picture of how much money actually flowed through your business. You underestimate your revenue and ignore your fees. And if you only track gross sales, you overestimate your profit because you're not accounting for what got skimmed off along the way. You need both numbers. Gross shows you reach, net shows you your reality. Let's walk through an example step by step. Say you sell 5 candles for $20 each on Etsy. That's $100 in gross sales. Now let's subtract the platform cost. Etsy transaction fee, 6.5%, is $6.50. Etsy payment processing fee, that's 3%, plus 25 cents per transaction, so that's $5.75. Your total fees are $12.25. Your net payout is $87.75. So what do your books need to show? Gross sales, $100. Fees, as an expense, $12.25, and net sales or payout of $87.75. That's the clean, accurate way to see what really happened. If you only recorded the $87.75 deposit, you'd miss the $100 revenue and the $12.25 expense. Both matter. This is one of the most common bookkeeping mistakes I see, treating deposits as revenue. It's easy to do. You open up your bank app and see the deposit and assume that's what you made. But here's why that's dangerous. It hides your true sales volume. If you did $1,000 in gross sales but only recorded $950 in deposits, your books will tell you your business is smaller than it really is. It hides your expenses. Fees are real business costs. If you don't record them, you'll understate expenses and distort your profit. It gives you false confidence. You might think your margins are better than they actually are. And false confidence is a dangerous place to run a business from. Here's another reason this matters. Pricing. If you're only looking at deposits, you might think you're charging enough when you're not. Say you sell an item for $20. After fees, you only net $18. If your costs are $15, you're only making $3 profit, not $5. That small difference adds up over time, and if you're not tracking it, you'll never know your true margins. When you track gross versus net, you see the impact of the fees on your pricing strategy. You can adjust accordingly instead of guessing. So how do you build this habit? Every time you record sales, record 2 numbers. 1, the gross sales, the full price before the fees. And 2, the fees, recorded separately as an expense. Your net sales will naturally fall out of that equation. This way, your books show both the activity, how much you sold, and the impact, how much you kept. Think of gross and net like this. Gross sales is the whole pie. Fees are the slices you give away, and net sales is the piece left on your plate. If you only track the piece you eat, you'll forget how big the pie really was. If you only track the pie, you'll forget what you gave away. You need both to understand the full story. So here's the takeaway. Gross sales and net sales are not the same thing. And if you treat them as the same, your books will never be accurate. Gross tells you the total value of your sales. Net tells you what you actually took home. The difference, fees, has to be tracked as a real expense. This is the first step in your money map, understanding that deposits are just the end of the story. If you want clarity, you have to start at the beginning with gross sales. In the next section, we're going to dig deeper into fees, Etsy, Shopify, PayPal, Stripe, and talk about exactly how to track them so you don't miss a single dollar. Now that we've cleared up gross versus net sales, let's tackle the piece in the middle, fees, because this is where so many small business owners get tripped up. They see fees as just the cost of doing business and never record them properly. But here's the truth, fees are real business expenses, and if you ignore them, your books will always be off. Let's take Etsy first. If you sell a $25 product, Etsy takes a 6.5% transaction fee, or $1.63. They also take 3% plus a 25% payment processing fee. In this case, it's $1. If you bought a shipping label through Etsy, that cost is deducted right away too. So from a $25 gross sale, maybe $22 actually makes it to your payout. On Shopify, the breakdown looks different. A $100 sale might have a 2.9% plus 30-cent credit card processing fee for $3.20. If you use third-party payment providers, sometimes extra fees apply. PayPal works the same way, 2.9% plus 30 cents per transaction. Sell a $500 service and you'll actually receive $485 after the fee. Stripe, same story, 2.9% plus 30 cents standard, with some variation depending on your setup. It doesn't matter which platform you use, every one of them takes a bite out of the pie. Here's why you can't ignore them. They reduce your margins. If you don't track them, you'll think your profit is higher than it really is. They explain the gap. Without logging fees, you'll always wonder why deposits don't match sales. They are deductible business expenses. If you miss them, you're understating your cost. Skipping fees in your books is like skipping rent or electricity. It hides a real part of your cost structure. So how do you actually record fees without making bookkeeping complicated? Here's the no fluff method. Step 1, record your gross sales in your income tab or column. Step 2, record your fees in your expenses tab or column under a category called payment processing fees. Step 3, record your net payout, what actually hits your bank, as the cash flow. That way your books will tell this full story. Sales $100, fees $3.20, net payout $96.80. It's clean, it's accurate, and it matches your money map. Let's say you had $1,000 in gross sales on Shopify in September. Processing fees were $29. Here's what your book should show. Revenue, $1,000. Payment processing fees, $29. It's an expense. And a net payout of $971. If you only recorded the deposit of $971, you'd miss two things. Your real revenue was higher. Your fees are a legitimate cost. Recording both gives you clarity. Now, what if you use multiple platforms, say Etsy and PayPal? The key is to track fees by platform. Create a line or category for Etsy fees, PayPal fees, Stripe fees. That way you can see at a glance which platforms are costing you the most. This isn't just about accuracy, it's about decision making. For example, if you notice PayPal fees are eating more of your profit than Stripe, you might encourage customers to pay through Stripe. If you see Etsy fees climbing because of shipping labels, you might reevaluate how you're fulfilling orders. One of the most common frustrations I hear from small business owners is, I never know how much I'll actually get after fees. But here's the truth, you can know. When you start tracking fees separately, patterns emerge. You'll know that on average, Etsy takes about 8 to 10% of each sale. You'll know Shopify takes around 3%. You'll know PayPal takes 2.9% plus 30 cents per transaction. And once you know those patterns, you can price with confidence. You can build fees into your cost structure instead of treating them as random surprises. So here's the big idea. Fees aren't just annoyances. They're real, predictable expenses that need to be tracked. When you record gross sales, track fees as expenses, and then log your net payouts, your books finally tell the truth. That's how you close the gap between what I sold and what hit my bank account. In the next section, we're going to talk about the missing piece for most online sellers, clearing accounts. I'll explain what they are, why they matter, and how they fit into your money map. And I promise, it's simpler than it sounds. Alright, so we've covered gross sales, net sales, and fees. Now let's talk about the piece in the middle that ties it all together: clearing accounts. If you've never heard that term before, don't worry. A clearing account is just a fancy name for a temporary holding spot. Think of it as a waiting room where money sits before it moves to your bank. Here's the simple version: a customer buys something from you. The platform, Etsy, Shopify, PayPal, Stripe, collects the money. They deduct their fees, then they pay you the net balance. That in between step, the place where the platform is holding your money before sending it out, that's the clearing account. It's not something you can see on your bank statement. It's something you track in your book so you can follow the money from start to finish. So why does this matter? Because without a clearing account, your books never match up cleanly. You record gross sales in one place, you record fees in another, but then your deposits show up in different amounts and you're stuck scratching your head. With the clearing account, everything lines up. Gross sales go into the clearing account. Fees are subtracted in the clearing account. The net payout is transferred from the clearing account into your bank account. That way, when you look at your books, it's crystal clear where every dollar went. Let's walk through an example step by step. Say you sell a $50 product on Etsy. Gross sales, $50, goes into your Etsy clearing account. Fees. Etsy takes $4.50 in transaction and processing fees, which you record as an expense. The clearing account balance is now $45.50. Payout. A few days later, Etsy sends $45.50 to your bank. The clearing account goes back to zero. At the end of this process, your books show sales, $50, fees, $4.50, bank deposit, $45.50, and everything ties out perfectly. Now let's do the same thing with Shopify. You sell $1,000 of products in a weekend. Gross sales, $1,000 goes into your Shopify clearing account. Fees. Shopify takes $29 in processing fees. Your clearing account balance is now $971. Your payout. Shopify sends $971 to your bank. Clearing account resets to zero. Your books now show sales $1,000, fees $29, bank deposit $971. No guessing, no mismatched numbers, just clean, accurate tracking. If the term clearing account feels too technical, think of it like an envelope system. Every sale goes into the envelope. Fees are taken out of the envelope. The money left in the envelope is what makes it to your bank. The envelope goes back to zero because it's not meant to hold money forever. It's just a temporary stop. That's all a clearing account is, an envelope in your bookkeeping system. So how do you actually do this in practice? If you're using a spreadsheet, create a tab called Clearing Account. Every time you record a sale, add the gross amount to this tab. Subtract fees as you log them. When the payout hits your bank, record the transfer from the clearing account to your bank account. If you're using software later on, you'll find most systems already have a place for this, but in the beginning, a simple tab in a spreadsheet works just fine. Now I know what some of you are thinking. This sounds like extra work. Do I really need this? Here's why it's worth the effort. Accuracy. Your sales, fees, and deposits will finally add up correctly. Confidence. You'll stop wondering why deposits don't match sales. Clarity. You'll see exactly how much money you made versus how much platforms are taking. And when you have clarity, you can make smarter decisions. For example, if you see that fees are taking 10% of your sales, you might decide to raise prices slightly to cover it. Or you might decide to shift more sales to a lower fee platform. Without a clearing account, you'll never see those patterns clearly. So here's the big idea. Clearing accounts aren't complicated. They're just a way to track the middle step between gross sales and net payouts. By treating that middle step as its own envelope, you make sure your books tell the full story. Sales, fees, and deposits all line up perfectly. In the final section of this episode, we'll tie it all together. We'll recap the full money map, sales, fees, clearing, payouts, and give you a simple action step to follow your next deposit from start to finish. Alright, let's bring today's episode full circle. We started with the big misconception: if you only look at the deposits in your bank account, you're only seeing part of the story. Deposits tell you what arrived, but they don't tell you how the money moved to get there. That's where the money map comes in, following the full path of your sales. Here's what we covered: gross sales versus net sales. Gross is the total of what you sold. Net is what's left after fees and refunds. You need both numbers to know your true performance. Fees. Whether it's Etsy, Shopify, PayPal, or Stripe, every platform takes its share. Those fees aren't just the cost of doing business, they're expenses you need to track. Clearing accounts. This is the bridge most small business owners skip. It's the waiting room for your money. Sales go in, fees come out, payouts flow to your bank. When you track it this way, everything lines up cleanly. When you follow your money map step by step, you stop second guessing your numbers. You can finally trust your books and see exactly what's happening in your business. So here's your action step this week. Pick one of your recent payouts, Etsy, Shopify, PayPal, whichever, and trace it. Write down the gross sales, the fees, the net payout, and the deposit that landed in your account. See how the pieces connect. That one exercise will flip the light switch on how your money really flows. And here's what's coming next. In episode 6, we'll dig into the backbone of your bookkeeping system, the chart of accounts. I'll show you what it is, why it matters, and how to set one up without drowning in categories. Think of it as the map key that makes all your numbers actually make sense. Until then, remember, clean books equal less stress. Thanks for joining me for another episode of the Zero Fluff Books podcast.